What is up, everybody? Welcome to Trading with a Dummy. I am your friendly neighborhood cornball. Yes, my name is Mark. You stumbled upon Trading with a Dummy. If you haven't done so yet, make sure you subscribe. Click that like button if you enjoy this content. And at the end, of course, smash that bell button so you get notified every single time I drop a video. Today, we're doing another Dummy Talk. I have a few things I need to get off my chest here. The good, the bad, and the ugly. Some drama, some not drama. But first of all, I have an announcement. Yes, you guys know I don't do a lot of lives, and actually I don't think I've ever done a live here on my channel. I've gotten interviewed on JT the Pocket Watcher on the Come Up series, and I think that's it. I think that was about it. So, but this Friday at 7 p.m., I'm going to be on another YouTuber's channel called Echoes from Above. Again, Echoes from Above. I'm gonna put the card right here so you guys can subscribe to him. I'll be on there this Friday. This kid kills it, man. I'm talking about he's dropping videos every single day. He's one of my favorite YouTubers. Been following him before he even had 1,000 subscribers. I used to just follow him through my private account. And then one day I just popped in there with my Trading with a Dummy account and said what's up. And he was like, dude, I like your content. Anyways, we're collaborating. So I'll be on his channel this Friday, live, 7 p.m. Don't know how long it's going to be. Maybe we might talk an hour, 2 hours, 3 hours. Who knows? Just, bring your popcorn, bring your drinks, and let's have a good time. What else can I talk about? Oh, yes. I'm going to be changing up my channel quite a bit, y'all. Yes, I'm not going to be doing trading or investing stuff anymore. I'm going to get into real estate. Yep. That's where all the algorithms are going right now. Real estate. No, I'm joking. I'm not going to do that. I am just going to revamp my channel in general and put out a little bit more content that's more valuable. I may start doing more of these. I plan on possibly going live. So this is going to be a practice for me, is going on his channel. Because I just, honestly, if y'all want to know why I don't ever go live, it makes me nervous. Honestly, it will make me nervous. I'll feel weird that I will go live and maybe 2 or 3 people show up. So that's the reason why I should put my phone on silent, which I did not do. But yeah, also, another news announcement. Cheat Code Algo. You guys know I dropped the first video out of 3. Well, now it's not going to be 3 anymore. It's now going to be 4. Yes, I just got another VIP treatment from Keo. He showed me this other thing that it just dropped. So I'm going to review that as well. Okay, so it's going to be a 4-parter. I already have majority of the skits in the beginning shot. I just have to kind of wrap it up in the story, which is perfectly fine now because I could put the ending part on that review itself. So yeah, I already did the algo. You guys have seen it. If you haven't, the card is right here too. There's a lot of advertisements happening today. The card is going to be right there on the algo alone. Then I'm going to do the community. Then I'm going to do the masterclass, and then I'm going to do the CCTA, which is Cheat Code Trading Academy or Teaching Academy. I forgot. I gotta go look, but it's their whole year-long program. So I'm going to review that as well for y'all. Yeah, so a lot of cheat code. Basically, my channel is going to be all about cheat code, reviewing cheat code. So it's just such a huge community. My God, I mean, there's a lot of information. That's the reason why it's taking me a little bit long to drop these videos. Not because I'm lazy. It's because it's just a lot of information. I want to make sure I get it right. And speaking about that, I want to talk about there's some drama that went down this weekend. Okay, I'm not involved in it whatsoever. But, and if you don't know what it is, oh well, just skip this part. Ignore what I'm saying. But I've said this so many times in my videos before. Now, I go from group to group to group and I review them. There's a lot of groups that I did not publicly review yet. I'm talking about ones that have been straight up trash. But I also realize that it's been real detrimental for some people to get into these groups that I'm fully aware of are a crock of shit. I tried it one time. I dropped the Red Panda review. You saw how that went. But I think I'm going to drop some other ones, or not drop them. I'm going to talk about some other ones here in the future, and then I'm going to be moving on from trading group stuff. But that being said, is like when I typically go into groups, all my past reviews that you guys saw, that's really how I felt. People cannot buy me out. Okay, you cannot give me money or say, hey, I get you an affiliate link and hook me up or whatever. Now I don't do any of that stuff. If you see an affiliate link out of any of the groups that I reviewed, there's a reason for it. It's because they offer it to me and I said sure, and I actually liked the product. So I have an affiliate link there. Puts a little cheddar in my pocket, not much, but it's nice to make some money every once in a while off of YouTube. But I'm not a type of person who's going to sell my soul for $1. So I think that's the reason why you guys like my channel. I'm 100% transparent and I'm honest. So that being said, I don't know every single person that I sit down in an interview. I reach out to people that I think are interesting. When I ask them questions, a lot of times that's the first time that I ask them that question. And whatever they respond, I expect it to be the truth. Okay? Same thing when it goes to trading groups. When I review them, I typically try to make sure that they're legit, right? That being said, though, and I said this in so many of my other um, reviews and groups and just my videos that I drop. If you join a trading group or an investment group, okay, and if it's a large group, expect the admins to be making more money off of the subscriptions than trading themselves, okay? Because it seems like a lot of stuff is blowing up here recently, and people are shocked, like, oh my God, they're really not trading. Like I said, if they have a large group, it's probably 9 times out of 10 chance that the admins are making their money off of your subscription services, okay? And if you're okay with that, then join the group and be happy. But you have to go in there with that mindset, understanding that, okay? I know a lot of people are fanboys of these groups. I know a lot of people feel like these are their stock guru, they're the person who changed their life. I get it, I've been there. But understand, these are human beings, and if there's money involved, sometimes that can change a person's direction. It can change that person's why. So just understand when you get in these groups, they're probably making more money off of subscriptions. And if you're okay with that, then by all means, join them. That's it. That's the disclaimer out there. If you still continue to join and you find out that they're really not trading, that's on you. What else? Oh, yes. So the market, right? It's been crazy. Did that little okie doke with y'all, right? On Monday, when the market was closed on Monday, but on Tuesday, everything was running up and everyone was like, yes, it's finally reversing. But again, I knew it was going to be temporary. How temporary? Well, I didn't expect the market to open up negative today. It was down almost 1.5%, but then it ended up, jumping up and then dumping at the end again. So still be careful out there. I still see no fundamental reasons on why the market would reverse itself. On technical levels, yes, there's a lot of indicators showing that we may have possibly reached the bottom. The historical data that shows that we possibly have reached the bottom, but I still don't think that we're there yet. Different environment than we've been in before, especially when it came to previous recessions. And yes, I do believe we are in a recession. If you don't follow the podcast that I'm on, that I do with my buddy Mo, Money Market Truths, the card is right here. Like I told you, this is just a lot of advertisements. The card is right there. Make sure you check us out because we do go over a lot of lessons he teaches. I talk about levels and buying areas on some of the stocks that I feel will be good entry points. And speaking of that, last week I covered a SPY position that I got into on the option side. Now I barely ever touch options these days because it's just, market's rough. You think it's going up, you get into a position, you wake up in the morning and the market took a dump and your position just went to hell. So I've been real cautious with that. But I talked about a SPY play when SPY reached at the 362 level. It was also happened to be the 200-day EMA on the weekly, and it was completely oversold. The only thing that didn't line up for me was the fundamentals. But I know that typically the market likes to go down and it needs to go back up to catch liquidity before it ends up dumping. So I talked about this last week on the podcast, actually for the past 2 weeks on the podcast, and I explained that I was probably going to get a leap or a 3-month play or a 6-month play, whatever. Well, on my Twitter, I said I invested $456 in myself, and I'll tell you guys why later. Well, this is the why. So I bought that SPY. I didn't do a 3-month. I did not do a 6-month, and I definitely didn't do a leap. It was way too expensive. What I could afford was a monthly, which was $456. I got that on Thursday. Market rallied on Friday, and it definitely rallied on Tuesday. My goal was 100%. I did not get to 100%. I exited around 80%. My position went from $456 and I exited at $800 or $8. And I think it ran all the way up to like $9 and then came back down or whatever. But that's where I exited, and thank God I did, because Tuesday everything opened up flat. I mean, maybe today I would have gotten, a little bit back, but I was cool. I'm cool. I sold. I'm not a greedy savage. That's the reason why I got up, because I wasn't sure how the market would react on that crazy bull run. It just moved a little bit too fast for me, made me fearful. Yep. Like they always say, when everyone is greedy, you should be fearful. And when everyone is fearful, you should be greedy. Yep. I don't know who said that. I think it was Warren Buffett, but just know that. So I'm out of that position, had a nice little return. And with that money, I end up actually buying some stocks. Yeah, I did. I started buying back in. It's been a while since I bought shares, and that's what I want to talk to you guys about today as well. First of all, I didn't realize this. I interviewed my financial advisor, which is Dustin Tibbetts. And another thing, again, why are you guys watching that interview? I don't get it. I did JT the Pocket Watcher. I dropped that yesterday, and it's got over 1,000 views in less than 24 hours. But Dustin Tibbetts, his interview has less than 300 views. Why? Seriously, I would love for you guys to comment below and let me know why you guys weren't interested in that specific interview, because the guy dropped gems after gems after gems. If out of all the podcasts, that was the one I think a lot of people should listen to, because he literally tells you how you can use your assets and get loans against it, and how you can save money, how you can write off taxes, and just everything. We went into a lot of information. I think it was a great podcast for the average person to listen to, because he's a financial advisor for the people. When I said that, I mean as in you don't need hundreds of thousands of dollars to invest into his management group. I think you only need $2,000. You're not actually paying him $2,000. I mean, like, you have to have $2,000 of investments or $2,000 of money that you want to invest, and he will take control of it and manage it. And I think his investment firm, which is called Jazz Wealth Management Group, they, I think, managed $2.5 million or so. But again, you can watch the podcast. Again, right here, here's another card right there. Listen to it, watch it. I really think it's a very informative ass podcast. So support the guy, support me, watch that interview, and let me know what you think. But anyways, I didn't know that once I handed over my Roth IRA to him, because I started consolidating everything. I took my retirement fund, I handed it over to him. I didn't know they were going to liquidate all my assets and then allocate it however they want. I thought they were going to keep my assets, and whatever had cash, they were going to allocate. Nope. So everything I've been investing in for the past 2 years is gone. So I was so close to getting almost 100 shares of Apple. All gone. All gone. IIPR gone. XLK, XLY gone. Everything's gone. That's fine. CrowdStrike all gone, and they investing it into small caps, mid caps, large caps, dividend stocks, whatever they're doing. They're managing it. I'm cool with it. I can sleep at night. That was like my only portfolio that didn't take a hit this year. A lot of my unrealized gains were gone for sure, but the money that I invested in there, I didn't lose any of my personal money. So they got control of it. They're handling it. Cool. So if you end up going the financial advisor route with your stuff, just expect them to sell the assets. So I'm starting all over again. What I end up doing, I consolidated all my individual brokerage accounts into one, and I'm going to try to get out of the hole in that one, and I'm going to start a brand new Roth IRA that I'm going to manage, which is going to have nothing but index funds. And that's what I did today. I did that option play, the SPY, made some money off of it, and I took the $800 some that I made, and I went and I bought 2 shares of QQQ, and I bought 5 shares of SPLG, which is similar to VOO. It's just a poor man's version of the SPY. That's basically what it is. Take a look at it. So I bought that, and I will continue to start scaling in as I see fit. So that's what I mean. Understand, I scaled in. I didn't just throw a bunch of money out there right away. I have money still sitting on the sidelines. I'm not going to allocate it all at once, because I still don't think that we have reached the bottom yet. But going back to the portfolio that I did merge all together, I'm going to talk to you guys and share my portfolio with y'all, because it is definitely down. I got Apple. So I do still have Apple. Wait, let me see how many shares I got. Oh, I got 20 shares of Apple. So sad. I was so close to 100. Anyways, I am down 11% on Apple. Facebook, Meta, I am down 50%. Roblox, I am down 52%. Square. Every time I look at Square, it just makes me mad. Square, I am down 64% year to date. Actually, no, it's just overall. My average is $172. Anyways, I had a veil option which I really let die. I got three of those. That's down 91%, XLK down 95%, and XLV down 93%. Those were options. So veil, XLK, and XLV were options. So that's all I really got, y'all, in my individual brokerage account. Once I merge them all together, I got Apple, Meta, Roblox, Square. That's it. And then those three options, which I think are all 2023. Oh, yeah, they're 2023. I should have exited when they were positive. Yeah, this is what happens when you get greedy. Yeah, I was being a greedy savage. I was actually up on some of these, and no, I'm not. So now all I have to do is pray to the almighty market makers that the market goes up some point or another where I could recover or at least get my money back, which is probably not going to happen this year. So yeah, I'm going to try to fix these. So this is going to be the account where I'm going to start buying assets. I already have my open orders. I have 8 open orders sitting here where I'm going to start scaling in. I have Disney, some orders sitting there, more Meta. I got more Apple, Starbucks, T-Mobile, Microsoft, Square, more Roblox, and I thought I had Bank of America on here as well, which I don't have. And then I'm going to look into some other assets I'm going to put in. Definitely going to put back CrowdStrike if it dips low enough, and some other assets. So this one I'm going to try to get out of the hole by the end of the year by averaging down when the prices hit like rock bottom. And then, like I said, I'm going to buy some other assets that I'm interested in. But my new Roth IRA, where I have the QQQ and the SPLG, those are only going to be index funds that I'm eyeing. I'm definitely eyeing Cyber, CIBR, and possibly TAN as like a growth ETF. TAN. Yeah, so yeah, I just want to cover that with you guys so you have an idea. I did slowly scale in, so don't think that I'm still completely out of the market. I'm going to be transparent with y'all, just halfway there. Now, on another note, I don't think there is another note. I think this is the only thing I want to talk to you guys about today. Just be careful out there as usual. Don't get fooled with these fake bull runs, these temporary rallies, okay? That's typically how a bearish market works. Now, again, this is my first time really living through a bearish market where I have assets in the market, where I have a ton of money in the stock market. This is the first time I'm experiencing a bearish market, and it is very tough to watch my portfolio down. But it's gotten a lot easier. Like the Square, I mean, probably every time when I talk about it, my reaction will be less and less intensive and angry and bothered. But I kind of just dealt with it. I'm not selling. I will add on a little bit, but looking at some of these prices where I bought in, I don't know what I was thinking. Oh, I know what I was thinking. I was following other gurus. That's what I was doing. Just listening to other people. This is the time to buy in. I feel bad for everyone who invested into Bitcoin at 40K thinking it was on sale because they all said we were going to go to 100K. So be careful. Anybody is telling you guys to take all your money in savings and invest it into crypto, block them because they're smoking crack, all right? You be crazy. Crypto is volatile, okay? It is, I treat it like a growth stock. I'm talking about all those shit stocks that, Jeremy and me, Kevin, all those guys talk about. Treat crypto like that. I don't think Bitcoin's going to go anywhere. I don't think Ethereum's going to go anywhere. But don't put all your life savings in crypto right now because you think it's the bottom. Like, we don't know where the bottom is for crypto. At least I don't. I think Ethereum is going to maybe 700. I was joking around. I think Bitcoin could go back to 3,000. Who knows? But I wouldn't put all your life savings in there because you just want to have a quick come up. And that's what I'm learning a lot of people are dealing with is those quick come ups. Where's the book? The Compound Effect. Y'all need to read that book, The Compound Effect. I'm actually going to put a link in the description below. You guys can download the book for free. There you go. I gave you guys a gift. Read that book. Seriously, it's a small steps that will improve your life. I think we're so focused on trying to have this quick come up because we saw the possibilities in 2020 where everything ran and these GameStop and meme stocks and all this other crazy shit was just taking off. I mean, literally, Bitcoin went from 13,000 to fucking 60. So, that's not the reality of the market. So just be careful, y'all. I know a lot of y'all lost money. I know, but just hold cash right now and slowly scale in when you feel comfortable. Just don't dump it all, okay? So every time you see one of these little rallies, don't think it's over and you're like, oh, okay, let me take $10,000 and just throw it in there. No, scale in. $500 here, $800 here, $200 here. If you don't have a job that pays you very well, honestly, just save your fucking money. Save your money. Pay off debt. Find a high interest yield savings account. I think Amex, I believe, yeah, because I have an Amex checking account. I just signed up for that. I think they give 2% right now if you just keep money in there yearly. That's pretty good. Most savings accounts don't do that. So think about doing that, y'all, honestly, because that's a pretty good return, 2%. So yeah, keep an eye on that. Find a savings account and pay off your debt first before you start investing into the market. You know, there's always going to be a bull run. There's always going to be a bear market at one point or another. Things are going to always dump and tank. So you will have opportunities. If it's not now, it might be 10 years from now, but just be okay with that, all right? So until the next episode, y'all, remember, I'm going to be on Echoes from Above this Friday, live, 7 p.m. Come through, support my channel, ask me some questions if you want. And all the trolls who hate me because I'm corny or whatever, come by, talk shit if you want to. I don't care. But this is the thing. I had this conversation with a person before. I built my platform on honesty and transparency. I did that for a reason. So you can't poke holes in my shit. So I don't over-exaggerate my lifestyle. If anything, I underplay it. So if you're going to try to shit talk me, if you're going to try to squash me and destroy me, come with some factual data. Hit me with some real information. Those are easier. Just saying I'm a clout chaser or I'm just a brother hating on other brothers or women or whatever, or I'm bad for community. Like that's like that superficial bullshit. Like it doesn't bother me. Hit me with some real shit, okay? Real shit. It's just hard when I'm always honest about everything. So anyways, see you guys in the next episode. Peace out.
I'ma make you mine tonight. Pulling your hair, baby. I feel you breathing on me, on you.